Hi there, traders. This is Brad Gilbert with the FX Market Insight for Thursday, the 26th of September. All right, now we've just come out of the North American session, and it's been a pretty good one for traders across the board. What we've seen is, and you may not sort of notice it here on the analysis, but things have cleared up a bit. There's not so much up, down across the board here. The dollar index has kicked into gear, and they're talking about the US dollar sort of rallying basically on a bit of a safe haven play, as the impeachment proceedings against Trump look like they've got pretty serious grounds to go ahead. So what we're seeing is at this stage, like dollar yen, dollar Swiss and dollar CAD, they're sort of back in the range, not doing a hell of a lot, but that doesn't matter. We've got these other pairs. Euro has now broken back down. Sterling, well, it's not doing a hell of a lot. We still have Brexit sort of running things there, but the Aussie and Kiwi are starting to get a bit more momentum on the downside there as well. And that's where we've seen most of our traders make cash over the last 24 hours in particular. All right, now let's just have a look at the major currency pairs. So the Aussie, it was lacking momentum. We just needed a bit of a kick. And then now we've sort of got it back moving to the downside. Yesterday we had the RBNZ interest rate decision. Now, the central bank was basically saying they're going to keep rates on hold for an extended period of time, blah, blah, blah. Same old rhetoric or rhetoric. What we saw is a bit of a short squeeze to the top side. Okay, there was no real extra dovish comments, but the overall fact is they have cut rates. They are looking to keep rates low and potentially cut them again if need be. So we saw a short squeeze almost up to 63.50. And that's where it sort of started to drift. And then it was a bit, what do we got going on? Then the dollar kicks in, right? The US dollar kicks in. So the Kiwi technical picture at the moment doesn't look like amazing, but we have something there to work with. Dollar yen broke down at the start of, or the end of last week. It's just been drifting lower and it's just come back. So we had those weaker US consumer confidence numbers, pushed it down. Now we've got the dollar strength just driving it back up above the cloud. To me, this is back into a sideways movement. And if anything, we really need to just probably come in and adjust that support line now. Now we've found that new low and it's bounced. We're looking at that. Kiwi, you know what? You're probably just deleting that trend line. And then over here on Euro, I mean, Euro is actually starting to be consistent. I think what we're going to see is a lot more traders feeling a lot more confident to get into Euro now. Okay, especially if we have some clear direction on the dollar. You can see how clear that support trend line was down there at just under 109.80. A clean sort of snap through. It's only run 40 points through that level, but once again, it's the start of the move towards sort of parity, if anything. And here's the sort of clean break here. I mean, for those traders who think that we sort of make up various bits and pieces about our analysis, if you're not sure about support and resistance trend lines, this is what the guys at the banks are looking at, and this is how it works. It's pretty simple. I don't have to sort of go around and find, specific charts to make it work. Have a look at the price action here. This is a very good example of the price action you see all the time around trend lines. Breaks down, comes back, retests, and then slowly drifts away. So, Brexit, there's so much news to come about that over the next month. At the moment, we're seeing the US dollar strength dominate. I don't know if that's going to last on sterling, but these other pairs are starting to sort of move to the downside. What we need, just before I go into that, and dollar CAD is trading sideways. So what we need is, if I just bring you back to the MyFX Trading Hub. So when you're looking at the overall analysis, right? So we've got these short-term moves here, right? Which are giving us opportunities on the hourlies. What we need is some consistency with that US dollar move. So it starts breaking the daily trend lines, and then we start to get all the ducks lining up, and that's where the really good trades will come from. But we do have the framework for some good trading ahead, right? I'm talking like today, tomorrow, as long as these impeachment proceedings continue and escalate, I think we could see the dollar rally just on the sort of safe haven sort of profile, and that's going to be a great opportunity for us. Now, final GDP numbers out of the US today. Well, you know what? The final GDP numbers are usually pretty much close to the money. It's the third GDP number. So just be aware of that. Then we've got Bank of England Governor Carney speaking. Now, to me, he's got his hands tied with Brexit, right, until they get something out of that. But then this is where the last week of the month always kicks into gear. It's always characterized by a large number of central bankers speaking. Now, we do have Bullard speaking, Clarita, and then you got even the MPC members talking the next day. So basically today, this is what you need to focus on: the final GDP numbers and some central bankers. At the moment, a lot of the moves are coming from sort of left field almost. You can't really see them. You know, this whole escalation. I'll just draw a little moustache there on Donald. He's trying to deflect the impeachment stuff, which you would expect. Now, he's saying they could do a deal with China very soon, okay, to try and make everyone happy, forget about his problems domestically. That's not going to really do it. And then the rest of the pairs, there's not much else going on. If you want to read about that sort of the safe haven play, I mean, this is where the media really starts to stretch the moves or the commentary. Is like, yeah, the dollar's going up, safe haven trade, and just offshore flows. It's like, yeah, whatever. But just be aware, this is going to be it is going to be a continuing thing. I think it's, you know what, I was all for Donald coming in, but he's just been a disaster as far as trading goes because of his inability to shut his mouth and cause trouble. So to me, Donald being impeached would be a great result and a good thing for trading in general. All right, so that's where we are. The currencies are starting to line up. Just keep in mind, we obviously do have these geopolitical events simmering in the background, but at the moment, the pairs for me to be concentrating on are definitely Aussie, Euro, and Kiwi seem to be the best pairs. All right, guys, that's it from me. Have a good trade day. Let's hope these trading conditions continue. Cheerio.